banks and institutions, they didn't serve us with the required tools. And that's why the idea of the blockchain happened and all this marketing buzzword is happening. But if we put it away, still there is a lot of needs which is served. And the stablecoin is the merge between crypto world and the fiat world, which gives an ability to decrease volatility and maintaining kind of the transparency with the blockchain approach. And unlike Bitcoin and Ethereum, it actually is stable, so you can project and store the value. Because in money, two things are really important. That's a cost of transaction, or cost of transport, and cost of the store, or store value. And store value with the stablecoin is pretty good because it takes the best from fiat and it takes the best from blockchain. And that's something that actually can be split once again in three buckets, because stablecoin can be fiat-based, it can be crypto-based, and algorithmic synthetics. Today, I would like to focus us on the fiat-based because that's maybe what is interesting for banks and institutions. And that's what I think is driving a lot of buzzwords, marketing, and the trends nowadays in this area. So if we take a look on the stablecoin market, it's pretty big one. So it's up to $300 billion, and the growth is significant. Like, there are a lot of different numbers, and what we see, and maybe coming from my personal experience, this year I've been to Stripe sessions in San Francisco, and what you hear there is only two topics: AI and stablecoins. The acquiring or acquisition of Bridge by Stripe shows that big fiat players who are providing the infrastructure, I'm not talking about the banks, but real payment infrastructure which is happening, they looking to have the entrance and the footstep into the stablecoin by acquiring the Bridge, adopting it for the merchants, and make it available for the Stripe customers. So there are a lot of numbers. I don't want to focus on all of them, but the market cap is huge. And here we can take a look on the graph how actually it will evolve with the crypto, because we might think that the crypto is something which not worth to take a look as an asset or something, but it shows really nice graph how we can see how it started and what we face right now, even with the market cap. So the market cap right now is around $5 trillion, and there are a lot of engineers who is taking care about the infrastructure. And what is important, the adoption of the wallet users, because crypto wallets, asset management, and the fiat stablecoin management is becoming standard. When we're thinking that we're competing against the customers for the banks and neobanks, we're actually competing against the wallet users who are then shifting the paradigm how they're using their funds. So it's pretty good to see and understand those numbers. There are definitely events which affected the market cap and the number of users, like scam with NFT, etc., etc. But that's, I think, the baby issues that usually is happening with the new technology. That's a little bit outdated graph because the last point is 2023, but still it once again shows that stablecoin as the process and annual volume is already more than a specific types of the remittances, or even more than PayPal, which is growing really fast. And it means that it's happening not because of the technology, but it's happening because of the need of the tools which are not provided by classical tools. And that's maybe the question of the time when it will overgrow the ACH or Fedwire. So key milestones for USDT, like we took a look on the picture in global, but I think it's really important to see what exactly it is. Because one of the first stablecoin, it was USDT, and when it appeared on the market almost 11 years ago, it wasn't even the stablecoin, it was just real coin, something that was initiated on the layer Bitcoin Omni layer, and only in a year it was rebranded to Tether, the company who was minting. And story is not as straightforward because actually there were a lot of lawsuits, a lot of questions in terms of the resources and liquidity. But right now, Tether claims that major US Treasury holdings and adjust to new regulatory frameworks. It's one of the biggest and most dominant stablecoin. And definitely there is always going to be the question, do they have a real liquidity and what is happening to the market? And I think we're already past the point in time when we can ask, is stablecoin with us? It's already with us. It maybe will change the brands, will change the way how we check in the liquidity, how we make sure that the company is working, because Tether is registered on British Virgin Islands. It's not a part, they move into San Colombia, if I'm not mistaken, but they have several entities and initially they were registered there. But I think it shows that at this stage, we cannot actually admit that the stablecoins will be happening. The customer will use, do we want it or not? Because there are a lot of mobile wallet users, etc., etc. So let's take a look on the first compete example, and that's a JP Morgan stablecoin. So that's another interesting case because stablecoin, JP Morgan initially issued their own stablecoin for specific clients. So they started the blockchain network, which they wanted to test, and they started with the blockchain. And instead of going into the open market, they started to test with the clients with the private stuff. And it was so successful that they started to experiment with the deposit coins. So basically, instead of doing the fiat transfers, you can actually, while depositing, to get this token and then exchange those tokens with the beneficiaries or for the transaction. And it shows that there is on the market, there is a lot of appetite to fix an issue that is potentially fixed by the stablecoin. So the idea is not to take something which already exists, but understand what are the roots for those issues and fix them once again. I think we will see for next 2-3 years some levels of growing the numbers of different approaches kind of to solve this issue with the private chains, with the private solutions from banks, and there is definitely a discussion for European stablecoins or digital currency. But that's one way to go. And then the second way is the case with the fees and with the Circle. Because Circle, one of the issues of the USDC, and instead of competing and creating own blockchain, basically Circle partnered with the FIS. FIS is one of the most, one of the biggest provider for core banking infrastructure in the United States. And actually, it gives really out-of-the-box functionality to use the stable coins and do the cross-border transfers. So 2 ways. And the third one, be disintermediated. And that's, once again, I would like to go back with the history with the HODL business. So we started with the HODLs. There is a company which might be known to British people as Thomas Cook or for other people. And it has really nice history. So it was one of the first considered, one of the first organized tourism. So basically they invented tourism. They expanded, they did really well. They has been acquired and sold to the National Westminster Bank. But do you know what has happened with this company nowadays? It doesn't exist anymore because of the simple fact that they missed digitalization. So they basically lost their competition to Booking.com. The moment when internet came into the computers, not even phones, they made a deliberate decision that they will not go into the digital phase. So they will not go to the customers because the usual way how to interact with the branches across the London, they put a lot of efforts into agent networks which was selling their product. But in the end of the day, they don't exist because they didn't grasp that the changes, how we're interacting with our customers and how we're solving their needs already here. So it's really a great example by being dismantled for the market. And one of the examples that we have in our portfolio as Dash Apps is a product in Asia, which is called DoPay. And in this case, it's pretty hard to combine in proper way and merge towards as a fiat, cross-border payment, stable coins, and in this case, even the crypto trading. So we are serving the company which has MEI and MiFID license, MEI and WASP license, which allows to do the onboarding for the customers. And we use the stable coin as a point for the conversion between fiat and crypto, because converting Philippine pesos to Bitcoin might be hard of the volatility, but the preferred way to get the funds and before the trading into the crypto to use the stable coins. And actually it brought really innovative product on the market, which is going to compete with the existing players on the market. And the challenges was that we had to deliver in 3 months. And we had to deliver the solution which is scalable up to 20 million, or up to 500,000 customers. So it's a fintech core. That's the product that we use to build it. We have our booth. If you're interested, we have leaflets and we can talk more about that. So that's a platform that allows us to do that. And conclusions that compete where you must, collaborate where you can, avoid being disintermediate where you don't have to. So stable coins are not the threats to the banks, but actually the inertia is. So you can actually subscribe to our channel, FinTech Garden. I'm doing a lot of interviews and podcasts with the different stakeholders. And if you want to join for the interview or the podcast, I will be really happy. So you can follow us there. And thank you for listening.